Hello everyone and welcome to the newest episode of the DEA Member Spotlight series. This series is all about showcasing our members' innovations that are solving real challenges in the world of digital money, payments and infrastructure. If you enjoy this new format, please hit like, share it with your network, and don't forget to subscribe to our channel to stay up to date with the more exclusive content. I'd like to start by thanking our standard members for their continued support and say that at the end of the episode, we will open the floor for a few audience questions. So feel free to drop your questions in the YouTube chat box throughout the session. Now, I'm pleased and honored to welcome today's guest, Lasse Meholm, CEO of Finance IT, and drawing on his work as coordinator and project manager for the Central Bank of Norway's CBDC project and his contributions to the ECB Digital Euro initiative, Lasse will showcase groundbreaking experiments. The session we will explore blockchain and token-based solutions, cross-border interoperability, and how lessons from projects like Icebreakers, Polaris, and mBridge can inform the evolution of the digital euro. So Lasse, thank you so much for being here, and I hand it over to you.
Super. Thank you for the introduction, Tamara, and thank you for having me. I've been looking forward to this for several months, so I'm really looking forward to get started here. Share my screen, the whole screen, share. So I hope you have my screen now, and I'll do it in presentation mode. Is that okay, Tamara?
Yeah, it's okay.
Okay, perfect. So I will go through what we did for the ECB when it comes to Digital Euro project, and then I will talk through what I did and what we did in Norges Bank, the Central Bank of Norway, CBDC Phase 4, retail CBDC. And the focus today is actually retail and also the future of retail finance. And I'm going to focus on use cases both for the ECB and the Central Bank of Norway. My name is Lasse Meholm. I'm Norwegian. I'm the CEO of Finansit. Finansit is today a one-man band. I'm the only one here. This is basically my introduction here. I was the coordinator and partly a project manager for the Central Bank of Norway, Phase 4. We was one of the 70 companies that provided information to ECB when it comes to this digital euro thing. I did a mistake. I clicked both the pioneer and the visionary, so I ended up in the pioneer. But this presentation today is the visionary part of my presentation. So what I'm gonna present today is my own world. I do not represent any central bank, neither in Norway or anyone else, or any organization I worked for or in. My background is both technical, IT technical, and business-wise. So I started a company called Tasset in 1990, brought it to success. We provided portfolio management software for stocks, bonds, derivatives, and so on. And we had customers more or less all over Europe. I sold the company after 10 years. I started a new company, Finance Cube. I also brought that to success, and then I sold it, and then I worked for Nordea, the largest bank in the Nordic, for 3 years, and then DNB, the largest bank in Norway, for another 3 years, and then for Ernst & Young, doing the digital transformation, blockchain, DLT, crypto, digital assets, and so on. And then I was engaged by the Central Bank of Norway as a consultant for 18 months, coordinating the Phase 4. And I was employed by the Central Bank for half a year to get started the Phase 5. Today I work for something called European Digital Innovation Hub. We'll come back to that. I also have written a number of best-selling books in Norway. Bitcoin, investment guide, what changed the world, and money, what is money, and the history of money. Also been part of a few business innovation projects like Icebreaker, Aurora, Polaris, and mBridge. I'm going to focus on Icebreaker today. In the European Digital Innovation Hub, we work in Norway with the University of Agder, and our focus is artificial intelligence. So I've worked 100% with artificial intelligence over the last few months, and I'm going to do that until next summer. We are mentor for a number of startup companies when it's trying to leverage artificial intelligence, generative AI, agentic or machine learning, robot process automation, and so on. We also do a project for tourists and travel industry in Norway, leverage AI. So today I'm going to spend maybe 50 minutes about the visionary proposal for ECB when it comes to digital euro. And then I go through Norges Bank, the Norwegian Central Bank, CDB project, phase 4, for another maybe 50 minutes. And then I will go into something else, for example, a number of use cases, not CBDC, but quite important, but also some input to the digital euro project. And then I leave maybe 15 last minutes or something like that for Q&A. Okay, the digital euro, a number of use cases. One of the use cases on the visionary part for us was the pay on physical delivery. I did it a little bit different from most of the other ones, I think. Peter went online, ordered a TV from a company called Goodsale. Goodsale sent the TV to Peter, and then the parcel service delivered the TV to Peter. And when doing so, Peter pays for the TV, and Goodsale transfer the ownership of the TV to Peter. Maybe TV is not a good example here, but it might be better if it's a car or something more expensive. But for this example, I use a TV. Behind this curtain, Goodsale update and mint asset ledger, because I don't think they're going to be one ledger in the future. It's going to be more than one ledger. So in this use case, I use more than one ledger. So Goodsale update and mint asset ledger ordered by Peter. Goodsale update and mint delivery ledger, another ledger, send the TV to Peter. And then the parcel service deliver physically the TV, and the parcel service double sign the original order by Peter, delivered. And delivered trigger another smart contract, atomic type of transaction, so that Peter pay and the Goodsale transfer ownership of the assets, in this case the TV. And what's important here is that testing out different layers and how they can interoperate is very important. So, for example, the asset ledger, part of the tokenized real world asset, for example, the factory might mint the token for the TV, and then the ownership is transferred from the factory to Goodsale stock on the stock exchange, and then the ownership is transferred to Peter when the parcel deliver the TV. What's important here is that Peter might insure the TV. The insurance company can use the asset ledger to make sure that Peter is the owner of the TV. Or Peter can make a loan in the bank, and he can use the TV as a collateral, or it might rent it out. But anyhow, it's important that someone owns the assets. So combining payment, digital euro, with real world asset is very important. And that's one thing I thought about when introducing this use case. What's even more important is digital identity. I don't think digital euro will succeed unless we find a way to solve the digital identity. In Norway, we have digital identity for all people and companies in Norway. It calls bank ID. But that is not the case in all European countries. So verified credential and digital identity is very important. And what's important even is also that we need maybe a new form of money, digital money, that kind of limit the possibility of fraud, scam, corruption, tax evasion, and terror funding. So if you can introduce a new form of money that prevent this kind of thing, it will be very good, very smart, if it's possible. So my thought here is that first we focus on the digital identity part, and you have this project going on in Europe, EIDAS too. So it should be a pan-European digital identity that goes through all countries in Europe. And then we have to make sure we have some gatekeepers. It might be post offices, banks, police, or someone else, but we need to make sure that no one else, that those people that should have, get a digital identity. So make sure that we have gatekeepers. Then open up the digital euro wallet and make sure we have a secure space or a secure element in the wallet to store the verified credential or digital ID certificates. And then the owner of the wallet, it might be the bank or PSP developing the wallet, or ECB might do it themselves, or someone else that is licensed to do so. So that the customer can request a digital identity certificate, verified credential, and if it's a custodial, then the bank can do it for the customer and ask the EIDAS infrastructure for a digital identity certificate, and then update the wallet for the customer. And here is the smart thing, because a token in a blockchain is a smart contract. And a smart contract is a piece of software, and a piece of software can be programmed. So go into the smart contract inside of the token and reprogram it to say, you are not allowed to be owned by someone that do not have this certificate in order. So so if a wallet has a valid verified credential, then the transaction goes through. If it doesn't, then the wallet the transaction is stopped. And it's not the bank or central bank that stopped. It's actually the money itself that do not accept to be transferred to someone without the certificate. If this is possible, I know we have actually done it, so this is possible. So if we do this, then the payment with a wallet with an invalid verified credential is not possible. And it's also possible to freeze funds in a wallet that is not valid. For example, if someone has a wallet, get some digital euro, and then the bank revoke the digital identity, then the money inside of the wallet is freezed. That is possible. So the result might be that PSP and banks are saving billions of euro per year in compliance work. It's very costly, the compliance work today. And also what happened is that banks prefer to use digital euro over anything other digital money if this succeeds. And we reduce scams and fraud for private and corporate, and that is very important. Another use case is subscription. A lot of people have very many subscriptions for magazines, for newspapers, for Spotify, for movies, and so on. So a lot of people have a lot of subscriptions. Some have even too many. I'm one of them. Each service need to comply with large number of different APIs. For example, Spotify need to integrate with a number of payment providers and so on. Banks lose also work to or transaction to Google Pay and Apple Pay for subscription. The solution might be to have a subscription in one app, for example, the bank app or one certain digital euro app. To do so, it's very important that you see the digital euro infrastructure, not only the money, but the infrastructure, having a library for APIs so that it is easy to hook on to the digital euro infrastructure, or also a library for smart contracts. So it's very easy for Spotify, Netflix, magazines, and so on to actually use the digital euro infrastructure and payment. That's quite important. So you can have, for example, one app having all your subscription in one place, and then you can delete them if you don't want to have them anymore, or you can add someone there. Very easy. You have everything in one place. I know some banks do, but most banks don't. And this is a solution for all people in Europe. This is next step. Pay as you go when you consume. Pay when you consume. So I made a short video. And I did it just before summer for this digital euro. Emma do have a mobile pay and a wallet, and she has a wallet with the digital euro either from her bank or from the digital euro ECB. So she can pay and transfer money from her bank account to the digital euro wallet. And then Emma said, okay, I will do something else. I need some music, for example. So Emma goes into Spotify and download the app, and the Spotify has already integrated with the digital euro infrastructure. So it's already there. So Emma installed, and everything is okay. So behind the scene, Spotify commute with digital euro. So Emma's play one song, and for this one song, she plays 0.06 euro for this only one song. So money is kind of streamed from Emma wallet to Spotify, and Spotify stream music from their site to Emma. This can go for music, mobile phone, magazine, gaming, film, car insurance, electricity, internet, newspaper, whatever. The point is that you pay while you consume. And that is very important. And I think that's a very good business case or business model for future. Here is another one I saw. It's from IOTA. It's an example from Canada. One car in new cars has sensors in front, in back, in braking, in driving fast, driving short, map, and so on. And it's very easy to kind of have this, digital twin. So you can sit someplace to follow the car. And the car also has a camera in front and in back and so on. And then they set up a marketplace for insurance companies. So insurance company give a price for this car per kilometer, depending on the car driving inside of city or outside of city. Is it driving fast, driving slow, and so on. So the insurance company can give a price, and the car chooses the insurance company every 1 kilometer. This means you have very small amount of money payment, micro payment, and so on, but a large number of them. Doing so is very hard to kind of monopolize the market like Spotify has done. It's much easier to get in as a small company, long tail, and then grow from there, having this kind of business model. Okay, that's for digital euro. I'm gonna come back to digital euro in 10 minutes or so. I go further to Norges Bank, or the Central Bank of Norway, and the project I was part of. There's a lot more on the website of Norges Bank if you want, and it's in English if you would like to see what they're doing now. I was part of the Phase 4 project, started in 2021, ending 2023, as a consultant, and then as an employee, I was part of starting Phase 5. Phase 5 will have a report by end of this year, so I guess they are spending all their time writing the report right now. And I really don't know what they've done over the last 1.5 years, but I'm quite sure they're writing the report. So I'm in focus on Phase 4, which I was a coordinator between 21 and 23. So the first thing was that we had 18 months. We spent two months to research the technology market. What did other central banks do? What kind of technology did they use? Have a talk with Visa, MasterCard, PayPal, Hyperledger Foundation, Corda, all kind of technology, and trying to figure out where is the market going over the next few years. And then we choose the technology and how to do it. And then we spent 3 months to build the sandbox, planning for a user case. We also started to have a dialogue with all Norwegian banks. I mean, absolutely every Norwegian bank was invited to have a dialogue with us. We also had a dialogue with the tax authorities, social security authorities, those who pay state pension and so on. So we had a number of I think maybe 40, 50 different kind of companies that we was talking to. Then we spent 12 months to build and test use cases and document what we did. We also had some hackathons, editathons, and presentation. And then we spent the last 3 months to write the report. Writing a report for a central bank is quite, well, it takes a lot of time. Well, we also had a number of hackathons. For example, one of the hackathons included Ida Wolden Bakker. She was the governor on the Central Bank of Norway, and she actually was part of the hackathon together with a number of startup companies and fintech companies. So and it was very successful. We tested a lot of new technologies and new thing that we didn't think of, new use case that was absolutely new for us in the project. We choose to use Hyperledger Bezo. It's a Ethereum-based client developed under Apache 2 license with Java. It's run on public and private network. We choose the private network. Why did it do so? Because Ethereum is a technology that we could find a lot of consultants, both in Norway for ourselves in central bank, and also banks and the end market could find consultants. We choose Ethereum ERC20 token, and also because that is it was standard in 2021. We run 6 nodes at Norges Bank, the central bank, with 0 transaction cost. That's very important. We choose to have a self-custodial wallet, not custodial wallet, and this is very important. I will come back to that. We used 5 seconds per block, and then proof of authority as a consensus mechanism. Then we didn't have any programmer ourselves. The central bank didn't have any blockchain programmer, so we needed to get programmers in. So we run 3 RFPs, request for proposal. The first one we selected Nami. It's a very small fintech company out of Bergen in Norway. There was 8-9 people, some of them in Norway, and some of them in London, one of them in Singapore, and so on. They did a very good job for us, fantastic. They built the sandbox for us. Then we had a new RFP and selected Symphony as a small fintech company out of Oslo in Norway. They built most of the use cases that we tested out. And then we ended up doing this Icebreaker together with other central banks. And we needed even more hands, so we had another RFP and choose NBX, Norwegian Block Exchange, to do so. We was very happy with all of this smart fintech companies, and I think my background is fintech, so I think if you want speed, low cost, people that are hungry to do a very good job, choose a fintech company rather than a big, slow company like Accenture, Deloitte, and so on. It is much better. You get things done really fast and really cheap, and with good quality. We put everything. Go back. We put also everything on GitHub. Absolutely every code we did, we put it live, public on GitHub. Open source was very important for us, and during this project. We built a sandbox, typical two-tier distribution model, one-tier monetary model, one tier because it's central bank money all the way through. And then we had central bank minting money, corporate bank distributed to bank's customer. And we also build a user interface, browser-based, so that we in the central bank could use it to mint and so on, and burn and send it, and bank could use it for themselves to have their own holding of CBDC, and they can also use it for the customer. So the bank really didn't need to develop very much to be involved in this project. And I think we had, I don't know, 10, 15, maybe 20,000 transactions inside of the sandbox during this 12 months. The first use case was helicopter money, paying, let's say, 1 million transaction with one click on the button. To do so is a little bit tricky because in each block you can have only a few hundred transactions. So you need to kind of distribute all this 1 million transactions over a number of blocks and make sure that you have a rollback situation. So we did it, and that it was the first use case we did. Then we tested out what happened if we make another sandbox. A little bit different technology. We used Hyperledger BSU, but we had an ERC 1400 token. And then if you move money from ERC20 to ERC 1400, then you lock it on the ERC20 side inside of the ecosystem that Norges Bank can control, to another ecosystem, 1400, and then you mint it there, and then it can circulate in the ERC 1400. And if someone wants to make it back, you want Norwegian kroner back in your wallet, then you burn it on the 1400 side and unlock it on the NOK side. And this SNOK might be Metaverse or Web3 and so on. And what's important when we started this is that the lawyers said, oh, what happened if we have Norwegian kroner in an ecosystem that we do not control? So it was a very good test. We use this verified credential thing I showed you earlier. We actually did it together with the Norwegian Digital Agency, DIGTIR, in Norway. They are part of the Digital Euro, Digital Identity Framework in Europe. So actually we did this. We tested interest rates, and again, open source is very good. We used the Aave DeFi protocol, did a little bit change in the algorithm, and then we could use it. 100% interest calculation on CBDC is very easy, and both positive and negative interest rate. This was very important, and the management asked if this is possible technically. We also tested AML, counter-terror financing, so we can flag. We had a decentralized Oracle network, so we can trace the transaction with, and GDPR is 100% solved, and we can stop transaction if something has a red flag, and then wait for a risk compliance officer to kind of double sign before it goes through. We test anonymous payment, and since we had so much inside of the token, we had business logic inside of the token, we could not use zero knowledge proof. It doesn't work if we do like we did. So we ended up using something called stealth addresses. We also tested CAP on CBDC, and then we tested Internet of Things. I'm looking at the watch because we used almost half an hour. So we also tested Internet of Things. So and we used IOTA. And then again, we needed to build a bridge between ERC20 and IOTA. And then you have one house having solar panel on the roof, and the other one does not. And every 1 second, you measure how much electricity is sent from one house to the other one, and then it's paid for every 1 second from the other one. So we tested out this Internet of Things and payment also during this pilot or sandbox, because there's no such thing as one technology fits all projects. So interoperability and testing different technologies is important. And then the Icebreaker. We was the first one in the world to test out retail CBDC cross-border. And it's technology agnostic. We use BESU. The Sweden central bank use Quorum. The Israeli central bank use Quorum, and Sweden use Corda. So we had 3 very different technologies. And we have multiple ledger, and the trouble was how should we kind of integrate the whole thing. So what we did was like this. I also made a sketch movie here. So we have one person, I called it Emma. She lives in, let's say, Norway, and then we have Benny, he lives in Sweden. Benny sells some services online. And Emma buys the services from Benny online on the web. Benny has in Sweden Swedish krona, and Emma has Norwegian krona. And then Benny sends an invoice to Emma, let's say every month or something, saying this is my address, my blockchain address, and you have to pay 1,000 Swedish krona, for example. And then Emma would like to have a bank to do so. Then we have a hub, and Emma asks her bank to ask the hub, what company or what bank do have the best currency rate between Norwegian krona and Swedish krona? And the hub answer, oh, that's JP Morgan, for example, because the hub receives currency rates all the time. So JP Morgan is just, and then Emma would like to pay this 1,000. And JP Morgan has a wallet both in Norwegian krona and in Swedish krona. So what happened here is that she doesn't pay to Benny directly or to the bank directly. But what happened is that the money is locked from Emma to JP Morgan. And then JP Morgan locked the same amount in Swedish krona to Benny. Not paid yet, it's only locked, and that's important. Then Benny share the secret code to Emma. Emma can unlock the fund from Emma to JP Morgan, and at the same time, JP Morgan unlock the money from JP Morgan to Benny. So we use something called hash time locked contract to kind of integrate different technologies, different ledger, almost atomic, and that works fine. We spent taking money from Emma to Benny took less than two seconds. Cross-border retail, that's important. Then a few transaction or few example on non-CBDC project. We did a test when I worked in Denver using public Ethereum to buy and sell flats together with Obos Bank. And Obos is the largest property builder in Norway. They build a few thousand flats every year and they sell it. So we tried to test out using blockchain for buy and sell of flat. And this was in 2018, using smart contract to kind of robotize the whole process between seller and buyer, and also apply for a new loan and so on. Do the whole process. It's quite long. And it worked fine. We didn't go live, but we tested it out a number of times. Then I was project manager from the Norwegian side when it comes to Marco Polo trade finance using Corda technology, and we spent quite a lot of time. Nordea, the other company, or the other bank I worked for, used something called WeTrade. WeTrade is based on Hyperledger Fabric and IBM. The trouble is, and this is very important when it comes to digital euro as well. if the exporter in Norway use Marco Polo, the system that we use, and the importer, for example, in Spain, or salmon or whatever, use wheat trade from Nordea or IBM, there is no interoperability. Actually, you cannot transfer transaction, or you couldn't. To develop this kind of thing took quite a long time, and we didn't know the cost, and also the unsure of the benefit. So we went out of the project in end of 2019. We was there for a number of years. And this is a problem when it comes to blockchain-based system. I was asked to kind of look into a whole ecosystem when it comes to the tokenized money. This mBridge was a building company that would like to build a hotel up north in Norway, a fantastic nature, and they plan to build this circular hotel up north, and completely energy positive. They have solar panel on the roof and so on. So the whole thing was planning to do as completely the tokenized money part, both the building of the project and also paying for using the hotel was a token-based project. So we have project token, liquidity token, bond token, because we needed to loan some money. It ended up they didn't finance the hotel, so it stopped. They didn't actually build it, at least for now, as long as I know. But it was a nice project. And then a little bit back to Digital Euro. So what I think, and I see that ECB provide or would like to have a custodial infrastructure. We didn't have a custodial. We have a non-custodial. And non-custodial wallet is money goes from payer to payee, only verified by a miner if it's a blockchain, it's a typical blockchain. So it's a peer-to-peer, and this is very important. If it's a custodial, it's not P2P anymore. You depend on bank and the payer depend on bank A, and payee depend on bank B, and the transaction actually goes between those two banks. So it's more or less emulating what we do today. Payer, bank A, central bank settlements system, and then bank B, and to pay. And what's very important is if you have cash or you have Bitcoin, non-custodial money, then you own your money. If you have a custodial infrastructure, then you don't own your money anymore. You own a claim on your bank, and that is very different. So you have to ask your bank to do the transaction for you. So I think this is a very important thing when it goes into the future, whether it should be a custodial or non-custodial. Another important thing is that if you do the design using APIs, you as a central bank can control the APIs. You can control very much what's happened, but you don't get the full potential when it comes to innovation. If you do it direct, you let wallet provider actually build wallet directly to the ledger, then you have a lot more innovation, but less control. So it's kind of balance that you need to decide as a central bank. A few other things when it comes to the digital euro, this holding limits, it might be something to discuss. The first thing was a few years ago, they said it should be 3,000 euro. That's a lot of money for some people. That's a little bit more money for some other people. So it might be more flexible. And also you lose the anchor when it comes to euro, if it's a legal tender. But you risk financial instability if the limit holding is too high and bank lose deposit, because that's part of the possibility of doing credit. So it's a plus and minus, but I think that's something one should discuss. Also, if the payer need to take money out of the bank account, send digital euro to the payee, and the payee need to send the money back to the bank or to another bank, then you have 3 transactions instead of 1. So I'm not sure if that's a very smart infrastructure or design for the future. Then digital innovation. I've been working for Norwegian Central Bank, quite close to the Swedish Central Bank and the Israeli Central Bank, and a few other central banks over the few years I worked for the Norwegian Central Bank. I'm not sure if Central Bank has adequate experience, organization or setup to issue and maintain, be responsible and accountable for a completely new form of money and a completely new technology. I don't think they have that kind of people that can do this successfully. So I think they need to figure out how to organize the whole thing if they're going to put it public. I also see the speed. If digital euro is to be launched in 29 or 30 or something, it might be too late. I mean, if you the rule of thumb is that if you're trying to look 5 years into the future, you have to look 10 years back. And what happened in 2015? Well, and Ethereum was 2 years old, almost nothing. We didn't have stablecoin, we didn't have DeFi, no instant bank payment. So a lot of things has happened, and so much going to happen over the next 5 years. So my question is it too late, or is it actually possible? Also the cost. I think each central bank need to invest maybe a few €100 million per central bank, and that's 20 of them. Not only ECB, but each country's central bank need to do something. And then each bank need to do something. And I said maybe 10 million per bank, because they need to do a lot of things when it comes to back office system, customer focused apps, and net bank, and so on. There's a lot of things those banks need to do. And then each retail and company need to do some changes. If it's a legal tender, then every single selling point need to be able to receive digital euro, and each private person need to be able to pay using digital euro. So that's very important. So there's a lot of challenges to be solved, but no one is impossible to solve. Another thing is that I really think we need digital euro. There's a lot of challenges, but I really do think we need digital euro. First of all, we need tokenized risk-free money, and only a central bank can do so. Absolutely risk-free money. That is important. And it's also important that this is a non-profit, not-for-profit organization. Central bank don't want to make a lot of money, generating money like a bank do today. They can look at the society in Europe, and I think the society in Europe will benefit from an organization that only aims to satisfy the good of the society and not its own profit. And I think a central bank is perfectly positioned to do so. There's a lot of people that are handicapped or have some trouble. Banks say we don't make money on them, so we don't care about them. But the central bank has to care about them. So I think we need that kind of organization to run some part of the business when it comes to payment. There also monetary policies is very important. In order to secure financial stability in Europe, someone needs to support a singleness of money, a strategy, money supply, and also government financing. And central bank is the only one that is designed to do so. So we need that kind of digital money. Also, if the digital euro become legal tender, I'm quite sure that will happen if it's launched. Then absolutely every private and corporate person need to be able to pay, receive, and hold. And I think only central bank is the organization that can do so. Someone need to be responsible and accountable. That is work. If someone lose money, then someone need to be responsible and accountable. And I think a central bank is the only organization in Europe to actually do so. And also looking into cash like digital money. It's instant payment. You settle, just give a note or a coin to someone else, and the transaction is settled. Finality is done, and you cannot change it. Anonymity it might be important. Offline payment is very important, and also for people with disabilities. They also need to be able to pay. And bank might say we don't make money on those kind of people, but someone needs to manage to get so that they are able to pay. And also we need a backup in case the digital infrastructure doesn't work anymore. And also central bank again is maybe the only one organization to do so. So that's not everything. That's what I managed to do in 45 minutes. So basically, thank you for listening. And this is my email address and my telephone number. It's for Norway, 47. And the internet site, finansit.no. Thank you. Stop sharing.
Yeah, thank you a lot, Lasse. This was really informative. Thanks a lot also for sharing your thoughts, your opinion. We do have some questions. The first one, it's about programmable payments. So how do you see programmable payments fitting into a retail CBDC without compromising usability or trust? I know that you mentioned identity at the beginning. Maybe you can elaborate it a bit more.
Yeah, I think programmable payment is very important, and that is not that easy today, and maybe that's one of the reasons that the stablecoin are getting popular. So I think programmable payment is very important. But when it comes to identity, I'm quite sure we need to solve the identity issue, and I need to solve it before we deploy digital euro in production one way or another. But having programmable money, I know that ECB has said we won't have programmable money. The trouble is that if you have a token based on blockchain, it is programmable. You cannot avoid it. It is a piece of software, so you need to, it is programmable. But there's something called the purpose-bound money. That is something else. So I'm quite sure that when it comes to programmability, ECB need to do so that it's your money, you can pay to whoever you want to pay to, whenever you want, exactly the same as cash. So it's your money, and it's up to you to do whatever you want to do with this. But you need a kind of compliance thing. So if you're trying to pay to terrorists or something, someone need to be able to do something. So, but programmability is very important when it goes into the future. It opens up for a lot of new business cases and business models, much more than today. So I think that's a very important part of the future.
Yeah, thanks. Now about so we have seen a lot of discussion about the wholesale versus the retail CBDC, also in the policy making ecosystem. And you mentioned a lot the retail one. And what's your point of view regarding the retail versus the wholesale?
Yeah, in Norway, in Central Bank of Norway, we focused on the retail, and I noticed at that time in 21, also the digital euro was only retail. Wholesale has come over the last few years. And if you look into the settlement in today in bank money, the kind of money we have digital today, the settlement is instant. And from one bank to another bank, they use central bank reserve to settle in between them. You could do this in wholesale CBDC, but you can also do it in the technology we have today. And the technology we have today is more than good enough for the future. So I don't see any need for a wholesale CBDC in the future. It's a lot of investment, a lot of things that have to change. And it doesn't give that much of new flexibility. And if one bank settle with another bank, if it does this instant every second, or every 1 minute, or every 5 minutes, every 10 minutes, 10 minutes is more than good enough between banks. So I really don't see the need for a wholesale in the future. But if you want to do a pilot or we test it out, and you choose to do it in a wholesale, it's much easier than do it in retail. Because in retail you have hundreds of thousands of people that should pay. In wholesale you have maybe 10, 15, 20 banks or something. So it's much easier project to do it in wholesale than trying to do it in retail. So for me, wholesale is not a challenge. You can do it. The technology is there. When it comes to retail, you cannot use anything that are out there today. So it's a more interesting, inspiring thing to do.
Okay. And now the last question. So it's about the future. So we have all these different formats of money. So CBDCs, stable coins, tokenized deposits. So you believe that we will have they will coexist together? So, or do you believe that one of them will dominate the other, or we'll have only one in the future? What's your take?
Well, I said many years ago, I think it was maybe 5 years ago. No, it was when stablecoin come along. Was that 20 or 21 or something?
Yeah.
I said I think the future is stablecoin because so much happening, and now we have euro stablecoin as well. The trouble when it comes to stablecoin is that we need only one stablecoin in US dollar. We need only one stablecoin in euro. We need only one stablecoin in each currency. Today, you have, I don't know, 20, 25 different US dollar nominated stablecoin, and they compete with each other rather than trying to amplify each other. And the same goes for Europe. So they kind of destroyed the whole market. It's not a good thing to do if you want to succeed in future. So stablecoin is a very good idea. I think they destroy a little bit for themselves. When it comes to CBDC, the central bank and the law and the European Commission and so on, by law they can say that CBDC is a money, what do you call it, legal tender. So if you say yes, digital euro is a legal tender, so everyone needs to be able to pay with it. Everyone needs to be able to hold it and receive it, and that by the law. So if they do that, and I think that's what they're going to do, then stablecoin, then CBDC will have a market, maybe a market share of. I think the money that we have today will have a market share. Let's say 10 years from now, maybe 50% of payment will be in the kind of money we have today. 20% will be in CBDC, and the rest 30% may be stablecoin or tokenized bank deposit or something like that. I don't think that tokenized bank deposits is a very good idea because you need to settle between banks. So it's a little bit cumbersome type of thing. The reason that JP Morgan and Citibank and so on focused on tokenized bank money was that they was not allowed to use stablecoin up till half a year ago or something, maybe a year ago. So that's the only thing they could do. But now they are moving over to stablecoin, and Mr. Trump is very positive about stablecoin. So I think stablecoin will have a market in the future, but I'm quite sure that CBDC will have even larger market in the future when it's launched. It's a secure, zero interest, zero cost doing the transaction, instant payment, and so on. So I'm quite sure they will be in the market, all of them.
Great. Yeah. Thank you once again, for this really nice conversation. Lots of information, but really informative and insightful. And before we wrap up, you can share your final thoughts or closing remarks.
Well, I have been positive about the CBDC all the time. So I was very happy when I got the project for Central Bank of Norway because it was a dream project for me. And I'm quite sure we need that kind of credit secured money in the future. And we need some organization that do not focus on profit all the time, and a central bank is in that position. So thank you for having me, and thank you for letting me share my thought about the future of finance and CBDCs.
Great. Yeah, thank you so much. And also a big thank you as well to everyone watching and engaging with us today. If you enjoyed this episode, please like the video, share it with your network, and subscribe to our channel to support this initiative and never miss a future episode. We'll see you soon for the next episode of the DEA Member Spotlight series. Until then, stay curious and stay connected. Thanks a lot. Bye.
Bye.